And okay. All right, guys. So this is going to be the new setup from now on. I'm going to basically be talking to you guys directly. And then I'll come over here to this screen and I'll be doing kind of like presentations with the analysis so that you can see me. You can kind of understand more directly as a human what I'm saying to you. Okay. So let's get started on today's setup. So this morning on the S&P 500, we had this price action going on during the morning session, and let me go ahead and zoom out here a little bit if possible. There we go. Okay, so you guys can see here that I had a penguin living right here at this 29.28 between 29.31 level. And some of you guys have seen that I've been doing the pitchforks, and you can see that the little smiley face right there that I just crossed out is a representation of where that pitchfork has a magnet. Most important part of the pitchfork, it's magnet, and kind of how not just the pitchfork, but the penguin and the blocks that you see here have contributed to this setup this morning. So I'm going to go ahead and zoom out a little bit here for you guys to try and get a super clean view of this block here. And to give you guys perspective, I grabbed this block specifically from the very basic concepts of support and resistance. Now, you might be new to this, you might not be, but support and resistance are the very foundations of technical analysis. And you can see here is your resistance, and here's your support. Now, where did we get that from? So we got it from, if you see that if this line were to be drawn all the way over, you would see that at this point in price action, there was support at that level here. You got a bid up, and then you found resistance, and then that support was broken and straight away sold back down to a lower value area, which was developed here and then broken when it caught a bid there at 28.80, near the lows of that early morning session around the European Open. Now, something that you should take note of is the fact that I also have proof of this support acting as resistance right there. Now you can see that we come down into it, we trade some value, we dump down, straight away gets bid up, we find that exact resistance, print some more value. So this is me early on in the morning identifying value and levels, right? But the key here is to have a more clear guidance in how you're getting those levels, and support and resistance sometimes isn't enough. So in this instance, I used a pitchfork, Andrew's pitchfork, and on the current price action, let's take a look here and see where I got that fork so that everybody understands how I drew it. So for educational purposes, I'm going to go ahead and delete this fork. I'm going to grab a new one. And guys, if you don't know this on TradingView, you can grab a Andrew's pitchfork right here, and you can modify it to be a modified pitch, a shift pitch, a inside pitch, whatever it is that you like. If you don't understand the pitchfork, I posted some information in the Profiteer room so that you guys can get a better understanding of how that works. Right. So check this out. I'm going to take this pitchfork. I'm going to draw it from the low to the high. So 3 points there. High, low, high. And then I get this midline center here that gives me symmetry. And what I've got set, so you guys can see, is a series of, Let's walk that back for a second. Sorry guys, let me redraw that real quickly. A little technical difficulty. Let's see. Okay. Low or high, low, high, and boom. All right, I'm gonna go ahead and lock that fork and show you guys the settings. So you can see here that I've only got these guys checked, the 144 retracement and the 175 retracement, the golden Fibonacci, and the 38.2 half Fibonacci retracement. So guys, I recommend that you get this book right here. This is called the Technical Analysis of the Financial Markets by Murphy. It is an incredible book that gives you a very clear understanding of everything I'm talking about, because let's be real, there's no way that I can possibly give you guys a perfect understanding just by giving you videos that kind of summarize what I'm doing. But I did want to take a second to give you the meaning of the Fibonacci in the glossary here. And here it is. Okay, so the Fibonacci number sequence 1, 2, 3, 5, 8, 13, 21, and so forth is constructed by adding the first two numbers to arrive at the third. So the 144 is included, guys, by the way. The ratio of any number to the next larger number is 62%, which is a popular Fibonacci retracement number. The inverse of 62%, which is 38, okay? I repeat, the inverse of 62% is 38. Is also used as a Fibonacci retracement. The ratio of any number to the next smaller number is 1.62%, which is used to arrive at Fibonacci price targets. Okay? So, this interconnects with Elliott wave a lot, guys, and honestly, I'm not a huge kind of like Elliott-tician. I definitely use it, and honestly, I'm still learning it. It's quite extensive, but one could argue one very simple thing, and that is that within levels of resistance and support along with these symmetrical lines, we can get a very clear understanding of what most technicians are looking at, and that's what you have to understand is we're technicians, we're not gamblers. We are literally on the border of scientist and artist in the sense that there's self-interpretation, poetic license here, and it's your job to learn what most people practice as an industry standard to effectively learn how to be a chartered technician, okay? So let's take a look here at what we saw this morning. So you'll notice that at approximately around 4:30 in the morning, we had a bounce off of these lows going into the U.S. cash equity open that did not qualify a trade. What qualified a trade was this fantastic block right here. And let me explain why. So I already explained to you the support and the resistance defined here and here. So that's what led us to drawing that box. Now, when I'm watching the development within this 2-hour range, I'm looking for two main things. Number one, does any of this support get tested? Yes, it does. It happens right here at around 5:30. Sellers failed to get that box broken, and buyers bid it up back into the value area that was developing over that period of trade. Now you can see that the first time that we tested the top of the box was during the actual kind of peak of that rip higher, that leg higher. Market pulls back, finds the support, and then you get this accumulation, and then you get a second test of that block trade, okay? So when I saw this price action right here, to be specific with you, up and down and up, that gave me indication that this could potentially be a block trade reversal. So what did I do? I went ahead and got long right here at the breakout to look for that attempted retracement of upside resistance prior, given that we had just tested a breakout of R1 or resistance 1. And guys, remember what I said. Old support is new resistance. Everybody's heard that before if you've ever looked at any trading education. And if I were to show you R1 now, or R3 rather, you can see that it is living. No, I'm sorry, R1. You can see that it is living right here. So this line here. And again, if I go back a bit here, notice that R1 used to be a support there. It used to be a support there. And now over time, it's become a resistance because that's how markets work. So let's go back to this morning's session and let's talk about what happened when I took this long here. So understand that my stop has to be below the block trade because we're looking for a target to the upside at previous resistance of value. Now, when I saw this start to dip down here, then I basically waited for a retest of an area that would imply support. And that's exactly what you see happening from our pitchfork that we developed in front of you seconds ago. And if I, again, go back to the current price action and show you how that fork plays out, you can see it very easily right there that you have a respect of these levels here, this level, defined by the pitch. So let's go ahead and erase that. Let's come back here to the little corrective pullback that found support right in this confluent zone at 90.12, 90.20, 29.20. And then what we decided based on the technicals we were seeing, that this is where you need to write this down, okay? 1 touch, 2 touch, 3 touch, okay? 3 touches outside of a block implies high probability of a breakout. So that's exactly what we got. When we take a look at that developed price action, you can see here that in just a matter of minutes after retesting the low here at the bottom of the box, and guys, in hindsight, this would have been a better place to enter, and you know, there's nothing we can do about it now. We were still green on the trade, but the point is the concept of the box still works, okay? So we break out here, and then finally all of these shorts here and here and here have to capitulate. And what happens when they capitulate? Well, you get a short covering squeeze or a short covering rally that then leads us excuse me, directly to our projected near-term resistance sitting at this smiley face. And notice, guys, how we also broke out of R1 and how we also are just testing that midline for the first time in many hours of this overnight trade. So again, to reiterate, 1 touch, 2 touch, 3 touch, fail, no breakout of the box, and then boom, breakout. That's your signal to get into the trade and look to size in for your first target at the R1 and your second target at that 78.6 retracement. Okay? Hope you guys are following. If not, just let me know in the Discord room and we can talk about it then. So looking at what occurred for the rest of the day, you can see that we built a bunch of long retail buyers at that breakout. We essentially went 1, 2, 3 touch and fail all within the midline. And guys, the midline again is this white dotted line that you see here. And notice how each time that we attempted to break through it, you saw failure with all these dojis. Once we came back down and broke that block's support, that's when you can take the cut and reverse trade. Now, you don't take it at the first break. You wait for confirmation that this block that you've developed on your technical landscape is indeed being supported, or rather is validated. So, okay, we violate that penguin / the block. We come in for a retest here, fail with a lower high, Still not in that trade because that was not in any way enough of a probability that we were going to continue lower. I had a support sitting right here. It held. We headed back, got all the shorts who were, spooked at the double bottom that we were going to come back and retest the midline. That's exactly what we did. And then at that point, my job as a technician is not to just look for a break below this support again, guys, but look for the acceleration and the lack of buying within there. And that's exactly what we saw. Unfortunately, I don't have the ladder recording. For some reason, it didn't work. But you can see that when this level breaks, you just get no buying whatsoever. We're coming into the 9:30 bell. Everyone's panicking on coronavirus, this and that. And then straight away down into the 144 right here and the 175 retracement, guys. Okay, these are key levels on the fork that give you guidance, as I said earlier. Once we have confirmed a absorption to the long side at our ellipsis between those pitchfork levels, you then get a very clean rally that defines itself as a continuation pretty fast. You get support, 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 and then of course the midline as a magnet, guys. Okay, you can't make this stuff up. All right, let's wrap this up here with a final discussion about the close of today's session. So guys, I just want to point out to you that we had the exact same thing set up at the close. We had a block trade developing from this value high and this value low. Buyers managed to make a higher low twice that gave validation to attempting the block trade, as well as noting, you guys, and I said this a couple minutes ago in the chat, as well as noting that on the volume profile, we have a 45-degree line here. And what that means is every time we reach an extreme, so in this sense, an extreme is this low and this high, we're unable to break out. And given that this high right here was actually developed at the close, let's go ahead and say that it was, I think it was roughly capped out here. So you had a high degree angle, here. Sorry. Right about there. And we really just were not finding any buyers or sellers with conviction on the overall macro sentiment. So what happens in that sense, you guys, is as you build out value, and take note of the difference between value and on a price action chart and on a TPO. Value's developing these nodes here. The thicker the node, the more value. And on price action, you're defining value by staying within a range that's very tight, right? So that being said, once we broke down into the low value area below the initial balance range low, guys, and by the way, the initial balance range is this blue line here represents this area as initial balance. This initial balance here with the green represents initial balance high. And then this bottom part with the red equals initial balance low. So a very balanced day, even though everyone was kind of panicking. And at the close, based on the fundamental narrative, you can kind of already assume that, like, okay, we've had an extensive sell-off. We're in correction territory. But realistically, let's all be real about this. Given the age of electronic trading and the acceleration of just quick execution, this was not a surprise. Of course, the markets dropped this fast on very, very, clear panic and opportunistic profits where people were like, yeah, let's trade today and let's trade hard and let's sell and make some money, right? So not too surprised, and I'm not freaking out about it. And here's what you have to understand is that when a market cannot break below these lows and you've got all these panicked people short, what do you think is going to happen at the end when they can't seem to get out of their position or profit on their position because they decided to sell these lows to try to get down here below 28.50? So take a look at what happened, obviously, you know, we broke once, or sorry, let me use a better color here. Okay, so you get 1 touch, 2 touch, 3 touch, and then the same exact play. You get support on a double bottom head and shoulders pattern here, and then boom, breakout, and then straight away a huge snap up through all of these shorts. They've got a cover, and you get target 1, target 2, 0.618 Fibonacci golden ratio, and most importantly, you close above 3,000 mark. Hit again, guys. This is classic contrarian trading using technical landscape and an understanding of market auction behavior. So to end this lesson, let me recap and summarize step 1 and setup 1. All right. So you've got a market that's on a downtrend. You've got several waves to the downside, and now you're developing value over time with support and resistance over a period of a few days. This was support. It's now become resistance. This was support. It's now become resistance. This was support. Well, I would say that it's fair that we saw it retest resistance a few times. Okay. Now, the accumulation phase occurs inside of those block trades that look like that. And let's make it a little clearer. I'll put 2 boxes there so you can get a sense of confluence. And every single time that that happens, that's when you can set up a symmetrical play to those previous resistance from prior, or alternatively, if you break out to the downside, have those support and resistance from prior price action. And that's the beauty of price action data. So again, 1 touch, 2 touch, 3 touch, support, and then break out to the upside, squeeze all these shorts out, and you get capitulation, and you can profit off of that sort of psychology. Now, secondly, the setup that you want to look for is the fact that when markets move in legs, they typically move in waves of 5 up, 1, 2, 3, 4, 5, and in legs down 3 waves, 1, 2, 3, and then so on and so forth. But remember, resistance was once support, and now it's resistance. So I hope that makes sense. Again, I encourage you to get this book, Technical Analysis of the Financial Markets. It's simple, it keeps things real, and makes you understand the truth about what trading price action means. Now, it's not that easy. Obviously, you need to study, things like profile, TPO, delta, all those things. But we just wanted to give you a quick recap on what happened today and how you can trade this volatility with keeping your marbles cool, if you will. All right. See you guys later. I'll be around later this weekend for a potential analysis video. Thanks for being here, guys. Couldn't do this without you. Just want to say thank you to all the Profiteer members, everybody who contributes all week. It's fantastic to see a community that actually wants to be better. So if you feel like you need to talk about something, you had a loss, bad day, whatever, just hit me up directly, and I'm happy to give you my input. All right. See you guys later.